3 trading rules every beginner must master. These are the 3 core trading rules for consistent success. Most new traders don't fail because the market is impossible. They fail because they ignore a few simple rules that professionals treat as non-negotiable. If you've ever felt overwhelmed, inconsistent, or frustrated with your results, it's usually not your strategy that's the problem. It's the foundation underneath it. Today, we're breaking down the 3 core trading rules that instantly make you a more disciplined and consistent trader. These rules work in any market, any time frame, and for any strategy. Let's get into it.
Rule number 1. Know your exit before your entry. The first rule is simple, but almost nobody follows it. Always define your exit before entering a trade.
Most beginners enter trades emotionally. It looks good. It feels right. It's moving fast. I don't want to miss it. But professionals do the opposite. Before they ever click buy, they already know where to take profit, where to cut losses, how much they're risking. Why is this so important? Because once you're inside the trade, your brain becomes your biggest enemy. Fear, hope, greed, and doubt start negotiating with your original plan. Example, you plan to take profit at $105. But now that it hit $100, you think, maybe it'll go higher. You ignore your plan and suddenly the price reverses. Or worse, you skip a stop loss just this once, and a small loss turns into a huge one. Here's the professional mindset. A trade is only valid if both the stop loss and target make sense before entering. If you can't define both clearly, it's not a trade, it's a gamble.
Rule number 2. Never risk more than 1 to 2% per trade. Your most important job as a trader is survival.
Not winning every trade. Not catching the perfect entry. Not timing the top or bottom. Your number 1 job is to protect your capital. Here's the math most beginners ignore. If you risk 10% per trade, just 3 losing trades can destroy 30% of your account. Recovering from that is extremely difficult. But if you risk just 1 to 2%, you can survive long enough to learn, adapt, and grow. Why pros? Cap risk. Losing streaks happen to everyone. Even good strategies have drawdowns. Psychology collapses when risk is too high. Trading is not about being right. It's about being consistent. Small risk keeps your emotions stable, which keeps your decision-making rational.
Rule number 3. Only trade when there is a setup. Most traders fail because they overtrade.
They feel pressure to always be in a trade, which is one of the fastest ways to lose money.
Professionals treat trading like hunting. They wait quietly, patiently, and selectively for the right opportunity.
Before taking any trade, ask yourself, does this setup match my strategy? Is there a clear trend or structure? Is my entry, stop, and target logical? Would I take this exact same setup tomorrow if I saw it again? If the answer isn't a confident yes, then the answer is no trade. Overtrading comes from emotion. Good trading comes from discipline. Your edge doesn't come from taking more trades. It comes from taking better trades.
Master these 3 rules, and you immediately separate yourself from the majority of beginners who rely on guessing, hoping, and reacting emotionally. Remember, have your exits planned before entry risk small so you survive long enough to win. Be selective. Only trade real setups. These aren't advanced strategies. They're fundamentals.
But fundamentals are what build consistent, profitable traders.